Well, welcome back, everyone. It was an exciting week in markets this week, one that leaned on a lot of the insights that we provided you right here into the end of last week, and of course at the very beginning of this week as well. You may have seen me bring up a chart like this that has the SPY going back in time to 2022, and you may remember Rob and I talking you through this time might be different when we were coming into that yellow zone with a higher probability for the market to chip away at that resistance at that 414 marker. Well, that's history now. We've obviously made higher highs, and we entered this week with the high-level thought that above $436, the SPY does have more room, the market itself has more room for potential upside towards the mid-440s or upper 440s. Now below 429, looking for some downside risk. And you may remember me teaching a little bit late last week on the weekend Saturday class and the Wednesday prior, where I was focused in on Rob's TRP tools, and you may have heard me take you through some of the logic and the signaling that gave us an edge on how this week would likely start. Now, we knew that we were in a weekly chart buy signal that was weakening a little bit into the end of last week. That was the last week candle, that little red bar there. The big green bar, of course, is this week's. And this is as of the close of the day. As you look for the signal on the daily chart into the end of last week, we had a cyan dot above price, which is a TRP sell. And what you noted was the support of the rising channel was underneath price, and effectively this was a sell signal in an uptrend where what we were looking for was a little bit of downside into the beginning of this week, which we got, and then of course a potential bounce up that could take us to a higher high, which we also got. And in fact, when you looked at the 4-hour chart signal into the end of last week, well, we had a 4-hour sell signal, and that really did fire off back over there on the 20th of June. And you can see that as we came into the beginning of this week, Monday, we came down into support of the rising channel. And earlier this week, on the 27th, a few days ago, we did get a 4-hour buy signal. And on a momentum tool in the subchart, we got that momentum buy dot as well, very close to the center, to slightly above the center of that channel in the subchart, giving us a higher probability for a bounce up off the rising channel. And of course, when the targets printed on that 4-hour bar, we had 441.86, 445, and 448 and 18 pennies. You can see that we've made our way into the end of this week very close to that midline target, and in fact several buy signals on hourly charts. In fact, we made it to a target 2 on an hourly buy signal that appeared right over there on the 28th. That was the last buy signal on the hourly chart, and of course that target 2 was achieved. The tools worked wonderfully, and they gave us an advantage to look for some downside risk to start the week, and that being then a likely dip and bounce up. Now the question is where we go from here. Well, I take you back to the daily chart. Remember last Friday we ended with a sell signal on the daily chart that pointed us down? Well, we've ended this week with a buy signal on the daily candle. And that comes with a target 1 at around $454 for the SPY. Midline target very close to 460 bucks, 459 and about 50 pennies. At a target 2 up here at 465. Now, why am I walking you through this? Well, the buy signal comes with a market that's very stretched, and it comes in a order of operations where we went to active trader room members over at BBT and said earlier in the week, last week, and even the week before, that we're looking for a market that likely makes another higher high, and we're projecting that higher high closer to 460 bucks. Using tools that are right there in front of us, higher probability tools that I'm going to be teaching you a lot about at the summit, and so is Rob. Rob wanted to be here on this video with you today, but he is working like mad to make this summit an incredible summit and get a bunch of great stuff, new stuff that can actually enhance further our trading and decision making. So stay tuned, and I'm super excited about that. He's going to be speaking multiple times at the summit, so am I, and we're going to have a lot of knowledge transfer, a lot of real life examples. But back to the matter at hand. This week, we started with the Active Trader Room Weekly Report, letting folks know that our view, which was presented several weeks prior, that the SPY has a better chance of coming up towards that 460 area. but not necessarily this week, over the course of 1 to 3 weeks. This week, we started off saying there's some risk for us to come down the 430 to 428 area, which is something we identified in the classes I did last Saturday on Rob's TRP toolkit. And we said, hey, the daily chart's got a sell signal. Rising support was sitting at that time closer to $428 to $27 on the daily chart. And of course, on the 4-hour chart, we already had a sell signal with a target zone between roughly $431 and the midline target, which is very frequently achieved, roughly $428. So I came to the room and let members in the active trader room know that we're likely going to start the week off with a little pullback, but we're looking at that as a dip buy opportunity, likely, wherein we can then bounce and see $440 to $443 or higher on the SPY before the week is out. And guess what? Today, we did get up on the SPY during cash hours, up to a high of $444.30. The S&P E-minis got up to $44.98. We ended up closing at $443.25. Nonetheless, we achieved the insight, and that has put us in a spot where I'm going to introduce you to one more chart that works like a pendulum. I'm going to focus you in on the bullish, indecision, and bearish ranges for the S&P E-minis. Let's zoom in on that. And the way this chart works is like a pendulum. If we swing from the bottom of the indecision range or bearish range up into the bullish range, in the week following, in the several days following, in the week following, we are likely going to see a pullback. Now, we ended up with a market that closed just underneath the top lip over there of the bullish range for the ES. 44.86 was the top lip. And currently, right now, we're actually trading at around 44.83 and about a quarter of a point as futures start ticking away into the end of this quarter and end of this week. Now, that means what? Well, a market that's really stretched and a market that has also signaled having the ability to rise, and we are moving into a holiday weekend where Monday is going to be half day of trade. Markets close officially at 1 p.m. Eastern time. Light futures trade Sunday night and then even Monday evening into Tuesday. But the shortened trade precedes July the 4th. And happy Independence Day to everyone celebrating. Happy Canada Day to everyone celebrating on Monday. Canadian markets will be closed then. And the insight that I want to provide you is, even though we've got the buy signal, and stats would tell us likely we hold up and probably see a higher high, the risk associated with adding further bullish long side trading over the weekend is a little too high to bear. The idea would be wait for the market to give us what would likely be an inevitable pullback to refuel. And what am I talking about? Well, I'm talking about, very simply, we've ended the day currently sitting in the after hours. As you can see, the SPY ticking away over there, closer to $443. We've ended the day in that area, a pullback to $440, even one down to $439 and change, meets with rising support on the daily chart with a confirmed buy signal. Now, that also can be viewed on a 4-hour time frame, pulling back down to 441, pulling down to even 439 and 33 pennies. Rising support exists. The likely outcome would be a bounce back up. So keeping some powder dry was our strategy, looking for the market, which did make a higher high in terms of the SPY. You did see that higher high in terms of the SPY. So I'm going to zoom in over there so you can see that versus the highs that were made mid-June. The mid-June high, top left-hand side of the screen, was $443.90 on the SPY. Today's intra-session high was all the way up at $444.30. So we did see that efficacy of signal strength coming in. We did get that higher high overall in market on the S&P. But the NASDAQ did not make that higher high, and that's a key insight. It made a lower high into the end of this week versus the mid-June highs. Now that's a bit of a tell. That tells us that there may be some risk associated with FANG stocks that were gussied up and held into the end of the quarter to make the books look pretty. But there may be a little too much on the books in terms of FANG land, and Q3 may start with a little attempt at a little higher high, but then a pullback would be the likely outcome. So I'm looking for a mini risk event. Likely it'll come in stages. $3 to $4 down on the SPY would be my estimate at this stage. And that's not coming out of the air. That's coming from the tools that you just saw me walk you through, i.e. $443 at close on the SPY, down towards potentially $439. Okay, that would be the rising fast speed line area for the S&P ETF SPY. And the expectation would be a bounce back up. Now, over the course of that kind of behavior, we would expect that after a dip and bounce again, there probably would be still a little froth left in the market that has to clear. So I'm not looking for necessarily a straight line up to 460. I think it's going to be a journey. And I'm really looking forward to being on that journey with you. In fact, I'm going to be speaking multiple times at the next Wealth 365 Summit that's coming up in less than 10 days. It's 9 days and 16 hours and 16 minutes to go. Get yourself registered, because Rob and I are going to be speaking multiple times on a variety of subject matter that is not normally discussed and key strategies that we are using in our own trading. Members of the Active Trader Room got to see me do lots of live trading in front of them today. Overnight swing trading on things like silver and oil, which worked out well today. And of course, on the ES as well, on the S&P E-minis today. Strategies to help intra-day trade and short to mid-term swing is going to be a key focus of mine, using powerful tools to help make better decisions. And I'm looking really forward to sharing that knowledge with you over the course of the summit in multiple touch points. And we've got some exciting things happening in the summit with excellent speakers. Simply go over to joinziad.com, get yourself registered. We'll see you at the summit, and of course we're going to see you in videos just like these midweek next week onwards. Have an incredible long market weekend. Stay safe out there, and we'll see you back here for videos just like these next week. Have a safe, happy, healthy long weekend, and happy Independence Day to everyone celebrating stateside. Happy Canada Day to everyone celebrating on the Canadian side. Stay safe, and we'll see you on the flip side. Bye for now.